All right, so literally minutes before the future session opened up last night, we got some good news on the trade front. We're going to take a look at how that impact the current technical picture, as well as our expectations going forward. Remember, then we always transition into what's driving the price action today. Pretty obvious driver of that. We'll take a look at how that's impacted different asset classes. And then finally, at the end of the video, as always, we take a look at a trade example, going through the process of this top-down analysis and looking for an example to put on a trade for today. So let's go ahead and get started. Today is Monday, February the 25th, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 first with the market forecast. You can see we started the day the futures got above 2,800 almost immediately, and we got up to 2,813.5 today at the high before pulling back. You were kind of flirting at the end of the trading session with 2,800, so we'll see how we finish up the day. I am doing the class a little early. I'm actually leaving out the door as soon as I finish recording to go to Orlando, so I'll post this while I'm on the road or in the air. So we're getting this recording done, so that's why we're a little early and things are still kind of moving as we go. But we're flirting with this 2,800. You notice it's brought the near-term line back up again, so we've got 2 more days up. We've got 11 days down. The near-term line has been above 50. 7 to 12 is your typical range, considering how strongly bullish we are. We're getting towards the kind of normal end, so 10, 12, plus days is more normal when you're strongly bullish, when we've already been strongly bullish off of the low point. So that's what we got going here. The momentum line dropped down. That's not surprising. We are closing near the lows of the day. It is a higher low, so that's why we're not like dropping all the way to all the way down here. And it's not that big of a trading range today either. I mean, we've almost filled in the gap. The gap, we closed at 27.92, and the low is just about 4 points away. So we're not very far away from filling in the gap here from the open. So it's brought the momentum line down because we're coming off of the highs of the day, but not to a worrisome spot. You see how that red line kind of stays in the middle of the chart, up and down, while you're bullish. It's when you get bearish, that's when you end up with the really bearish days. You got a lot of really bearish days because we tend to really close on big days at the lows of the day when you're really bearish, and that's why that momentum line very rarely gets up to the top, and that's usually a reversal sign. And when you do get a bigger range and close at the low while you're this strongly bullish, that can be the reversal sign to the downside, and obviously we're not getting that right now. You can see we're getting very similar patterns on all the major indexes. The Dow's getting a little bit of a long upper shadow. So we haven't had this bit of a long upper shadow for a while. The last couple of times have led kind of to short-term pullbacks, nothing more than that. And we're not talking big long upper shadow, especially with the VIX as low as it is. You'll see that here in a minute. The Nasdaq bouncing up again without getting below 50. Got to 50.5 before bouncing up, and then the Russell 2000 starting to diverge a little bit. We're getting significantly lower highs here while we're going considerably higher to the upside towards 1600. And again, relatively long upper shadow there as well. That can paint some short-term weakness here. Heading into the rest of the week, heading into a GDP week, heading into a pretty busy week with economic indicators due by the end of the week. And of course, the March 1st deadline, which now isn't a deadline. That's the news that came out right before the futures markets opened last night. So, needless to say, I mean, we continue in the bullish trend in the short term. We've gotten up to that 78% Fibonacci level, the magical 2,800 level that we've been looking for. This high, this kind of magnet, not necessarily that it will act as ASIP resistance, and if it does, it's because of these other highs that are in the same area, but mainly because it's, these big round numbers can act as a magnet. It can pull us up, it can pull us through too, with some fake out moves. So I was kind of eyeing today's move to see how big it is, how much volume is involved, and how much we break above 2,800 to see what kind of fake out move that potentially might have by the end of the day. And you can see, we didn't hold up at the highs or continue that much higher. In fact, we're now pushing back down towards the lows and filling in that gap. So So not as much fake out potential now at the end of the day as we had right at the very beginning, especially overnight, but right at the very beginning of the market open this morning. Before we look at some other charts, a reminder, subscribe to our YouTube channel, mouse over our Market Scholars logo right here in the bottom right corner of your video, then hit that red subscribe button that pops out. Also hit the thumbs up icon down below the video. That tells me, number one, you got something out of the video today. It also tells me, number two, you want us to do the video again tomorrow. So it's a quick, easy way, one-click way that you can just give us feedback right now and let us know that you want us to keep doing these videos as we do them day after day. So you can do that right now while you're watching. Also, scroll down and comment on anything that did stand out to you. As people come to the video and kind of see what they want, why they want to watch it, they look at your comments, and so let them know what you got out of it and why they should watch it as well. Also, join our daily Market Outlook email list. There's a link popping out up there in the top right corner of your screen. Really easy way to subscribe to our email. Follow me on Twitter for more content in between these videos day after day, and join our Market Outlook community that we created on Facebook. Also, while you're watching the video, remember you can participate in our Market Outlook forums. There's I don't know why that link didn't pop through here. There's usually a link right here to be able to participate in our forums. It's not there right now for some odd reason. But you can see that link on all the others videos. This is Friday's. Most of our other videos have a link right above it, and hopefully ours will today as well. Also, you can click this heart right here. That will like today's Market Outlook tweet, and then also click on this image and go to your Facebook page and like tonight's Market Outlook post there. Again, really easy clicks you can do right now while you're watching. It lets us know that you like the videos, that you want us to do these videos again and more and more. It also tells Twitter and Facebook that it's good, that you think it's good content that they should spread out to others. And you're also telling them that you want them to keep pushing you all of our stuff in the midst of everything else that you follow. Alright, now let's take a look at the long-term chart and see what we got here. And you can see, again, we're going for week number 10. And other, there's been a few tweets I've retweeted out over the weekend about how bullish it is to have a 9-week winning streak, at least on the Dow. We didn't quite get on the S&P. And how bullish it is to close with a January and a February. We're talking like rest of the year double-digit returns by the end of the year. So really, really good bullish start to the year. Of course, it was because we were so bearish. And it's really pumped the seasonality moves. You see the seasonality chart is way off the chart. So, usually when you got this kind of a seasonal move, and when we're this unseasonal in our move, we tend to pull back towards it. So just keep that in mind. We can pull back quite a bit and still get back to the average. That's kind of a normal thing to happen, so we'll watch out for that. And you can kind of see we got the golden cross today. A lot of times when you get the golden cross, you get the retests, because that will solidify that cross. Or because if we go right on through it, then obviously we don't have a golden cross. We're back to being bearish, similar to what we had over here. So we don't want to see that. All right, so we'll see. Well, now we'll watch now for that retest, that pullback to the 200-day moving average. Now let's see if we hold the retest. Still got the 3 green arrows, even though the MACD is very, very close. I mean, it's hard really for the MACD to get too much more bullish and really pull away from its moving average, which is what the histogram measures. So that usually, will portend some weakness when you're this bullish and the histogram is that flat. Stochastic's breaking below its moving average a little bit, but its moving average is also very high. And you're still above the 8-day moving average and have been for multiple weeks now. Very, very long extended run. I've talked about that before, how overbought of a condition that is. We are getting a lot closer to 30 than we were at the peak. We're not that close to it, but the gap is shrinking because we're still going up at a pretty decent pace, but the 30-day is catching up, starting to catch up. Alright, now we can take a look at today's intraday move. You can see we did get a higher high. We gapped up. We filled in most of the gap. Not quite all of it, though. We didn't quite get down to Friday's high point, which was the close. Higher high, higher low. Closed up above the high, just barely. Closed up above last week's high. You see, last week's range really tight, like only a few points. That's a very, very tight range for a week. and you can see we rallied up a couple more points there, but you can see how close we are to the week's range. How close we are to the Hakinyashi Open. We're not that far away, and this is going to move by the end of the week. This is going to move up. Once we get through to this low point here. That's what, 6 points away. That means it's going to move up about 3 points. The dotted line by the end of the week is going to be sitting right where the purple line is. So we're going to be the range is going to start tightening up, and we're going to get very close to these intra-week support levels. The previous week's low point, the Hakinyashi Open candle open for the week, the midpoint of the 4-week range are all creeping up, and we're not pushing higher at a strong enough pace, and we're really pulling these lines up at a really rapid pace. Again, just a sign that short-term weakness, not trend-changing weakness, not bear market weakness, because we're not that binary. I hope we're not that binary. But at least, sign of weakness that we're going to run out of this bullish momentum. That doesn't mean you can't make bullish trades, but it does mean that you should really account for that risk factor in any new bullish trades. Especially, and take some, and maybe even reduce some of your existing bullish trades that you've been in for a while now that have done so well over this past few weeks. Maybe we start lightening up on those and take some profits, not on the whole positions, but on some of them, as we start seeing some of these technical signs that typically lead to weakness. One last chart to look at. You can see how volatility has ramped back up to 14.5 and back into the neutral zone. So as quickly as we have broken below it finally, and we were talked about that last week, are we going to hold that break down? Well, today you can see how we just got right back up above 90. Now, the week's not over, but you see how fickle volatility can be, and that's been a really good thing for our inventory class, because we went pretty bullish on volatility last week during this, while we were kind of sitting at these support levels. We'll see how this ends up the rest of the week, whether or not we get up above 15 or not. If we get up above 15, pretty good chance we probably could get up above 95% here too. And again, sign of weakness, this weakness in the short term, not trend changing weakness, maybe just trend pausing weakness, but not trend changing. So I just want to make sure that any implication of expected pullbacks that we've been looking for a while, any implication that it may be coming sooner rather than later, is simply just the idea that it'd just be a pullback. It wouldn't be a bear market. I know that's what it seems like, right? Either the market goes up and we're in a bull market, or the market goes down, we're in a bear market, and we have to find a reason why, and all hell's going to break loose. And that's not the reality. The reality is you can't go up forever, and the longer you do go up forever, the bigger pullbacks tend to be. So we like the nice, easy pullbacks, and we might be headed towards one right now, getting closer according to some of these signs. Alright, so what do you think? Do you agree with that assessment, that market outlook? Do you disagree? There's a link popping out in the top right corner of the video there. Click that link. It opens up a poll. Then hit either agree or disagree. If you click disagree, scroll down to the comment section. Let me know what you're seeing. Maybe you see something different that either causes you to be a lot more bullish than I am, or maybe that you're expecting more than just a little bit of a pullback. So if there's something that suggests that you want to share with the rest of the community here, make sure you scroll down and share that in the comment section down below. Alright, now let's transition to what's driving the price action today. And you notice, if I would have told you the market's down today, I could have asked you about one specific asset class and which one was our biggest loser, and you probably could have guessed right. So let's take a look at just today and how things performed just today. 1 second here. Alright, 1 second here. Right here. There we go. Alright, sorry about that. Yeah, crude oil. Look at crude oil dropping like a rock. There's again a presidential tweet about how high the price has gotten. Well, just like that, it falls 3%. And of course, that puts pressure on the equities because the market's been beaten up because of crude oil in the past, and it's been lifted up higher by crude oil's rise here lately in the past so many weeks. And of course, a 3% drop is going to pressure. Emerging markets, though, still doing very, very well. If you take a look at the emerging markets and which ones are doing the best, you can see. I mean, look at China benefiting from this weekend's potential positive trade news. Turkey, Thailand, Indonesia, India. I mean, all of these major emerging markets all really taking off and doing well today. When you look at their charts here on the 12 grid, this one right here. at least the biggest ones. This would be China and India and Russia. Brazil also among the 12 largest economies. Look at that breakout move with China. You can see India getting back above its moving average. Russia trying to bounce up and get going again. South Korea bouncing up along with India. You can see Brazil pulling back a little bit. It's a little bit disengaged from what's going on in Asia. But Japan also benefiting with rising and a strong intermediate posture rising moving average. Russia and Brazil actually have a falling in a weak bearish posture, but they are still above their moving average, just barely, but still above it. So there's the weakness. India is the weaker one of all of those. It's got a bullish posture, but it's still below 50. It's a weak bullish posture, and it's just barely getting above what's still a falling moving average. You can see that despite the weakness in crude oil and commodities, agricultural commodities down too, as well as real estate. On the other, the dollar was down. You can see gold didn't really move too much. You can see that growth stocks underperform value stocks, but both of them kind of lagging a little bit. Emerging markets, that was your really one big asset class that outperformed. The Dow Jones also outpacing small caps or large caps as well as small caps. So this really wasn't a broad-based risk-on move. It was more of an outlier move in the emerging markets, so of course according to the news headlines, and an outlier move in crude oil on the other side, again according to pretty much headlines, and really nothing else. So Monday's typically light on the economic and earnings calendars, but it's been headline risk. Everything else pretty flat, pretty sideways outside of commodities, real estate, and emerging markets. You can see while the broad market was, down off of its highs of the day today, and still kind of flirting with the 2,800, we're still not closed yet. But you can see some of these sectors really did poorly. Real estate, utilities, and staples, your safe haven areas all dropped the most. Materials, technology, financials, industrials, energy. I mean, these are kind of dollar-sensitive areas. The dollar really didn't go up very much. If you take a look at the one-year chart here on the 10-year note, it jumped up a little bit, but not above 2.7. That's where it'd really be a significant move to the upside. So again, it really wasn't a risk-on move from a broad-based standpoint, but from a sector rotation standpoint, you can see how the market is positioning outside of these interest rate sensitive, safe haven areas that have been so bullish, and now rotating into some of these other areas that have been more bearish, industrials, materials, energy, that have a little bit more room to run now. There's still strong bullish postures and above moving averages, just not the same relative strength that you've seen in some of these other areas like staples and especially utilities and real estate. With the market making kind of a run here and looking like there's a possibility that volatility may bounce in the short term, and you can see there's some strong support with that. We're above this strong volume node, just above 270, a little bit about 271 and a quarter maybe. Of course, you've got some resistance up here, the all-time highs that we have. But you also have a couple of other highs here, and we're get so extended. It's as you get this bullish, it really grinds its way higher. So it lends itself to more of a sideways neutral type of a trade, but one that instead of being bearish on volatility, because volatility is already dropped a lot and looks like it may bounce in the short term, but a neutral trade that would be bullish in volatility. So instead of selling two vertical spreads that are out of the money, instead we'll look at buying two calendar spreads that are out of the money, one at 274 and one at 284. You notice when you do that, you put your break even down here right around that strong support level, and then your break even up above at 286, where again, we're so bullish to get here. That's not as much of a concern. This is more of the area that we might be trading in by the time March expiration comes around, at least by the end of the month, which is where this weekly options expire. And you can see if volatility does rise by the end of the month, if this is a bullish month in terms of volatility, look at the impact it has here on the long, my break-even points to the downside, as well as my maximum gain if we were to trade down in this 270 area, 270 to 2, and then maybe even bounce up to 275. So for $240 of risk to take on the trade of buying the 2 calendars, you can see we can get a pretty decent reward for that risk, for a pretty neutral trade, that we don't need the market to go one way or the other. But if volatility does go up, then it helps, it benefits this particular trade. Alright, and that wraps us up for today. As always, thank you very much for watching. Remember, there's a link above the video there on the blog that takes you to our forums. I want to hear from you now. Go to the forums. You have to subscribe to our site for free to participate there. Ask any questions, any comments you have. Answer anybody else's questions or comments as well from other market scholars that watch these videos daily. Again, thank you very much for watching. Have a great week, everybody. I'm off now to Florida. I won't be back till next week, so I hope you all have a great week. Treat Brandon well. He's going to be really busy on his own here, so treat him well. Remember to subscribe to our YouTube channel. Hit that thumbs up icon down below. Comment on the video. Follow us on Twitter for more content, and join our community on Facebook as well as at marketscholars.com. Have a great one, everybody, and we'll see you all next time.